Just give us a brief overview of what's happened, say, in the last 50 years since the 70s. Because if we're coming off the back of FDR's New Deal, we've gone to something, it seems, very, very different to that right now.
Right. Yeah, there's been just a complete transformation of the country, really, in the last half century. It's really dramatic, just how big the shifts are. So in the let's just look at 1970. So 50 years ago, we saw a country that had a minimum wage. If you adjusted it for both inflation and productivity growth, say up to today, would be about $21 or $22 an hour. Today it's $7.25 an hour. We had about, and I'm not going to rattle off too many numbers here, but about 53% of GDP went to income. Today, that's about 41 or 42%. So that means that much more of the country's output is just going to wealth. In other words, people who own things and that are collecting rents from that. So we saw this significant shift in terms of the balance of the economy from production to ways of collecting rents. I mean, I think I would put it starkly in those terms. So what happens in the 1970s is that there's this big economic crisis. Essentially, commodity prices get very high. Oil, but not just oil, food, metals, everything else. And so this really kills profits in the U.S. corporate sector in the 1970s. And at the same time, wages, there was still this upward pressure on wages because the entire post-World War II order was built on an increasing standard of living for workers. They were sharing in the productivity gains that were being created in the post-World War II era in the Bretton Woods period. Same thing in West Europe, not to mention Japan and a few other places. And so this resulted in both a crisis of profitability, but also a lack of investment in research and development. And so it was thought that the U.S. risked slipping or declining as a consequence of this new environment in which it found itself in. And so a decision had to be made. I mean, what was going to be done about this? So there were these supply-side economic ideas at the time that were being advanced by people like Milton Friedman and others. And they said that the solution to this is actually not all that hard. What we need to do is to shift more wealth to capital. Because if you've got a lot of money, you're not going to spend it all. You can't, unless you're a narcissist. I won't talk about one that we all know of. You can find endless ways of actually spending money, but typically you invest it if you have this excess capital. Whereas if you give it to labor, they're going to spend it on things. And if you're in an environment at that time, which was marked by loss of inflation, you didn't actually want more spending because that was part of the problem. So he wanted to shift this balance so that people with money had more money. That meant labor had to have a bit less. And it was thought that this would result, again, in this new period of innovation being created, which would create the productivity gains, which would launch a new round of economic growth and prosperity.
So we'll get like new Edisons, new Fords will come
Precisely,
forward.
Yeah. But what happened, I think, as the evidence shows over the past 50 years, is that research really did not take place. And we can look at research expenditures over the past 50 years, and rather than increasing, they actually declined. And what research spending was left was really being done by the public sector for the most part, through science grants that were going to our public and private universities. So private companies, instead of having these new Bell Labs, which in the early and middle part of the 20th century saw this incredible explosion of innovation taking place in terms of research and introducing all sorts of new products. Companies did not want to spend that money anymore on that because the returns were too distant in the future. And you had a shareholder revolution in the 1970s in which people wanted higher returns every quarter on their invested capital. They didn't want to wait for years and years for investments to pay off. And so they offloaded or they externalized those research costs to the state sector. So what happened with all this money that was shifted upward? Well, it largely went to the financial sector. So we saw what we often hear, the term financialization. The economy was financialized.
So then we get the rise of Wall Street, really in the
Definitely.
80s. And
Right. And by the time we get to 2007, right before the big 2008 economic shock, just to back up a little bit, I mean, what we've seen since this period of financialization was introduced in the 1970s was that all of a sudden a very unstable economy was created. If you take a look at the U.S. economy in the post-World War II period, say from 1945 up through the mid-1970s, there really were not any major, I mean, there were recessions, but there were not financial collapses to speak of. After this new supply-side model was introduced, the financial crashes emerged, and they started coming more regularly, and they were bigger with each subsequent shock. So we begin with the Franklin Bank crisis of 1974, and then we see the S&L crisis and several more. But by the time we get to 2007, as a percentage of all corporate profits, finance was consuming nearly 50%. I mean, this is incredible. I mean, what does the financial sector do that could possibly warrant consuming nearly half of the corporate profits in the country? Well, of course, the answer is it can't. It tells you something about the general trajectory of the U.S. economy and where money was flowing. It wasn't flowing to research and design and development of new products, that's for sure. I mean, it was just being recycled through Wall Street, and these super profits were being generated that were not being invested in the productive sector. So, we really created a new economy, one which saw a kind of permanent stagnation in terms of people's wages. We saw locations, as you referenced, where there was affluence, typically the coast, so the northeast of the country and the west, while much of the interior of the country really saw significant decline, which eventually gave us this kind of political, for lack of a better term, populism that we've seen in the past few years, and the emergence of the Tea Party and Donald Trump, et cetera. So if you take a look at the former industrial heartland of the country, it's a place that's marked by an opioid crisis and lots of poverty, and it was once the richest part of the country. If you had to choose between an indoor toilet and an iPhone, you were probably going to take the indoor toilet every time. In other words, the big gains in terms of productivity happened in the United States between about 1870 and 1970. And the ones that have happened since then have not been all that big. And the ones that we have had are still, for the most part, based on technology that was developed in the 1960s for the space program. So, with my computer here in front of me, or with the IT sector in Silicon Valley, it's based on the microprocessing chip, which replaced, so a computer chip which is about as big as your thumbnail or smaller, that used to require computers that were as big as this room that we're in, with a battery of air conditioners to keep them cooled. But we had certain needs, such as a space program, so we developed technologies which introduced these new productivity enhancing possibilities, not really developed by the private sector on its own, but by the state. That's where the big innovation came. Or even with a figure like Bill Gates, what he did, which is quite impressive. But he took a myriad of pieces of new technology that were lying about all around him, and he assembled them in new ways. But those pieces of technology were, in effect, developed
which kind of had come out of the Bell
public
Labs
sector.
and so on.
Yeah. But also by the public sector, actually,
right,
by state spending in our research universities, because they really have the capacity to undertake the kind of long-term research programs that are required to produce anything that's really new these days.
Well, the other thing I'd like to pick up on and perhaps develop, you mentioned that we've kind of reached a position in which the US economy is unbalanced, or, well, I can't remember the exact word you used. It was like either vulnerable or something like that. But the big contra-argument that's always wheeled out to that is, oh yeah, but we have the dollar, and that's like our guarantor
Right.
of stability.
Sure.
I mean, is that false faith in the dollar? I mean, can anything get past it?
Well,
Because if you control the world's currency, you can kind of
it's true.
rig the game, right?
Right, until it isn't. And we don't know when it's not going to be anymore. But yeah, that's essentially how the United States has been able to go through this transformation over the past half century without seeing too dramatic of a decline. Again, you have to look at the United States by location to see where some of the big declines have happened. But the United States would have declined much further if it didn't have the U.S. dollar as a global reserve currency. It's allowed us to maintain really, really big government deficits. It's like no sweat, because people need a place to park their money, especially oil producers, oligarchs from the former Soviet bloc, etc. And, you do that in London and you do that in New York.